Okay, hi everyone. This is a short presentation on MIT and MLT, right? Both based in Singapore. Please remember, I'm not a financial advisor. This is not financial advice. I may make mistakes in this presentation. Okay, do not make decisions based on what I've shared in these slides. Right. So I'll just go straight into MIT's annual report. All right, and only show you the things that are particularly relevant to shareholders. All right. So if you look at distribution per unit, this is a very nice uptrend, right? And the last year, financial year, had very good results, 10% increase year on year, right? NAV per unit also increased steadily over the last 5 years, all right? So this again great results for shareholders, right? So if you had held the stock in 2018, it was worth $1.47. That same stock you hold on until 2022 is now worth $1.86. Right. So here there's a slight concern about the leverage going a bit higher from this period of 2018 to 2019. Alright, but I do believe that they still can manage because it's still quite low, okay, versus the limit of 50%, and the average borrowing cost seems to be decently low, right? They have fixed 70.5% of their interest rates, and the foreign currency net income, alright, also has been hedged into Singapore dollar, right? So 60% is hedged, right? So if you look at this, which is from their presentation slides for the six monthly, so this is sometime in June or July 2022, I believe, right? So you can see their dividends keep going up, right? I do not believe there's any year which the dividends have gone down, right? So this is a very well performing REIT. Right, so this is a slight area of concern for me because you can see that this is their original asset portfolio at 2010, which is all Singapore. Right, now they have gone to America and they have 50% in America. Right, so the American side is slightly worrying because I'm not sure if America will go into recession. Right, but on the other flip side, you think about it, because of heightened interest rate, the American dollar should strengthen. Right, so those parts that earlier they show here that they not hedge into Singapore dollars, right? I'm going to assume that they're taking in from as USD, which should get stronger, I believe. All right, so they should maybe make more profits. Okay, we can hope. Right, so largest tenant is HP. Nothing much to say too much about that. Yeah, the current price of this stock as of recording is $2.38. You can see it's a premium over its NAV of 188. Right, so we'll just jump a short while into Mapletree Logistics because I just want to do a comparison of the 4 REITs that I've sort of trying to read into in recent times. Alright, so Mapletree Logistics versus Mapletree Industrial, right, is a lot more diversified. Right, you can see Singapore only 25%, whereas Mapletree Industrial is 50%, and the other half is in North America, right? But Mapletree Logistics focus is clearly here, okay, China and Hong Kong, right? This is about 38%, 39% of his portfolio, right? So this highly affects Mapletree Logistics, right? So yeah, I think I won't talk too much about Mapletree Logistics, just added in because I want to see their comparative stats. Right, so as mentioned earlier, MIT's DPU, this is taken straight from their investor relations website. So just to show you how their DPU has gone up very nicely over the years. Mapletree Logistics is a bit more bumpy. Right, you can see some drops here. Right, I guess this is due to the financial crisis. Of course, Mapletree Logistics has a longer history, so it went through the 09 crisis, which MIT did not, right? So that's why the industrial version of Mapletree does not have this drop, right? But you can see here there's another drop here in MLT, right? But otherwise the performance seems decently good. Right, so I just want to compare the 4 REITs that we've sort of discussed so far, which is MIT and MLT today, Ascenders REIT and CapitaLand China Trust. Alright, I tried to put their price here and their dividends. Okay, sorry for the not justified dividends here, right? So I just want to compare their dividends. You can see that MIT, MLT, and Ascenders REIT at this point sort of pay around 5.6, 5.7%, which is really close. All right, and If you are looking at NAV, MLT seems to be the cheapest. There's only a slight premium. In general, if they trade at a premium to their NAV, it sort of means that uh, people believe that the REIT is well managed because they're willing to pay more than what the REIT asset is actually worth, right? So you buy the share is actually really worth 147, but people currently are still willing to pay $1.56 for MLT, right? Which is a 6% premium, right? You look at MIT, there's a 26% premium. Okay, so part of the reason is probably because they've done well so far and there's no blip in their so-called results, right? But sometimes this premium can be too much. All right, so the question is it worth it to pay so much over its real NAV of 188? Okay, so that's a question we have to think about, right? So Ascendus is also uh, a higher premium than MLT at this point. All right, I just want to compare with CapitaLand China Trust, which we did cover, right? Its dividend is a lot higher at 7.8%, and you can see that it's actually trading at a discount. All right, so there are reasons for this. Of course, there's worries about China's COVID lockdown and so on and so forth. All right, so everything has a reason. Please do your due diligence before you make any decisions. Thank you.